Hi all, welcome to TCM Education. In this video we want to discuss an important topic. Should we set preferences with regard to the price of the stock that we're trading? Should we prefer high or big ticket stocks, NVDA, Apple, Google, or should we prefer low ticket stocks like in this case RGTI or Mara or AGUT or any other at least high volume under $15 stock? Now, as much as I want to say that we want to leave it to the market to decide, it's true that on a given day $10 stock can move up 30% intraday, as much as NVIDIA can move up 5 or 10% intraday, or any other stock for that matter. So it's a matter of timing, and it's a matter of finding the right stock. And if you find the right stock and you adhere the strategy or philosophy that we're actually pushing here to this channel, which is trade a fixed amount of money. It doesn't matter how many shares you trade, as long as the stock is very liquid, and we're talking only about liquid stocks. That's why they are on the daily power list. So if we're going to go back now and show you the daily power list of yesterday, that's a daily power list, and here it's arranged according to price. You can see we have here stocks anywhere between this is the price, and anywhere between $10 NTLA, the cheapest one, and Robinhood at $98. So should we go first to Robinhood, or should we go first to basically based on other criteria? Obviously we have a better criteria, which is the range percentage criteria, but I want to show you in this video that it doesn't matter. The most important thing is to find the right entry that fits the strategy, meaning a stock that's moving higher. Obviously all those stocks are up double digits, so they're all moving higher, no question about that. And then see an entry point that fits the strategy, meaning no more than 1% of risk, and then buying the $20,000 position. Now, why is it important if you buy 100 shares, or in this case Robinhood, you buy 200 shares, that's $20,000, or in the case of NTLA, you buy 2,000 shares, that's $20,000. In the US, you don't pay commissions either way. Now, I agree that if you trade outside of the US with offshore brokers and European brokers, it does matter because the commissions add up. And if you trade 2,000 shares versus 200 shares, you pay way more commissions. That can really dive into your profits. But we're talking about US traders, the US platforms, commissions are zero. And I want to basically take this concept out of the equation, because we don't want to deal with commissions when we have a concept where, okay, we're trading $20,000 per position, we're risking $200. If we're going to start adding commissions if you trade in Australia versus zero commissions when you trade in the US, that doesn't make any sense to us, so it's a waste of time. So let's say no commissions. If there are zero commissions on both trades, there is absolutely no reason to basically prefer the high ticket stock versus the low ticket stock, because that factor is out of the picture. So the only factor that should be of interest to us as day traders is the risk, and if it adheres to our strategy. Now, the daily power list is an evolving list. In the beginning of the trading day, we have 3 to 5. By 11, the list grows, and of course, after 3 p.m., the list is full. So,
want to stop guessing and start trading like a pro? Join our one-on-one mentorship program. Learn high-impact, low-risk chart patterns, risk management, and experience with live execution. Get expert coaching and one-on-one training and support. Get your day trading green with strategies that work. Sign up today, spots are limited. Email thechartsmaverick@gmail.com.
possible that some of the stocks that are in the list now, you won't be able to see them when you actually are looking at the trade. But we're not, without additional help. So we have two additional lists, the long and short list. We discussed them plenty, so I'm not going to dwell into that. So let's see how trading low ticket stocks, okay, can get you there. When I say get you there, get you into the 4-digit column trading those type of stocks. Not every day. Again, it depends on what the market is serving you. If the market is serving you small fish for lunch, you eat 10 small fish instead of one big one. You're gonna get as full as I'm guessing as eating a full fish. So that's not a very smart analogy, but let's save time and dive into it. So let's go with those trading idea. Let's go with NTLA. I will go very fast. Is there a trade in NTLA, first of all? And we're using the same strategy all the time. The strategy is very little risk, and in this case, there is a trade. I'll show you to you in a minute. Here is the trade that we're looking at. That's over lunch. The entry is 1070. The stop loss is 1066. That's a 10-cent risk on this consolidation above the VWAP. That's very important, above the VWAP. The trend in the stock is, as you can see, perfect to the upside. What happens here? The stock moves up 18 cents, comes back to the entry, and you stop out and you lose. Too bad, that's a loss. Has nothing to do, of course, with the price of the stock, but not all trades are going to be winners. So that's one, if people ask me why you show most of your trades are winners, okay, here's one that's not a winner. Okay, so that's one stock. Let's go now to a different story. This one, RGTI, it's already prepared. Let me just change the color so it will be, understood where we're going. This is RGTI, traded yesterday and closed up at the highs of the day. So take a look here. What happens in this stock? Does it adhere to the strategy and fills it to perfection? Yes. The stock is hovering above the VWAP and trades or fluctuates between 12 and 12.12. What is the range of the fluctuation? That 1% of risk that we're looking for. How much time does it spend between 12 and 12.12? We have 1, 2, 3, 4, 5, 6, 7, 8 3-minute bars. That's 24 minutes. Let's call it half an hour. Can you take a trade in this time frame? Can you make the decision to take a trade knowing exactly what is your risk? And you don't need to think about how many shares you're going to buy, because $20,000. So if it's not set on the platform, you're just going to divide $20,000 by 12. It's going to be 1,800 shares. You're buying 1,800 shares, and the risk is the same, $200. And you close and you sell it at the close of the trading day. So what happens here? You have a winner of basically $1. So on this trade, you make $108,000. Sorry, $1,800, $1,800. If you adhere to the strategy, of course you don't have to adhere to the strategy. You can do whatever you want, but I suggest, based on years of observation, to do it. It's not very hard. You just need to do nothing. Okay, just press the button at 3:58, market sell, and that's it. Now, can you add to this trade? Obviously you can. There are adding points. Can you sell along the way? Of course you can sell, but I'm just making a point where we're not getting greedy with a huge positions. Why? Because there are so many trades around us that are working. So while this stock is working, RGTI, and the work started at 12:30 and it works for 3.5 hours. We can look at other trades and add them and disregard this trade. This trade is already a winner. You can move the stop loss to the entry after 15 cents in the money and forget about it. Just sell it at the close, whatever happens. Good things happen to good stocks. Is Rigetti a good stock yesterday? I think the answer is in the chart. So that's one example, actually the second example. Let's go to another example again from yesterday. Not a big mover, anything like that. Take a look at this. Again, the same strategy. I'm not suggesting you buy it early in the morning. I'm not suggesting anything, definitely not suggesting buying breakouts. Again, pull back to the VWAP. Risk is in this case 6 cents. So it's not even 1%, in this case it's 0.5%. So basically you can buy here a $40,000 position, but we're not going to get into that. We're going to stick with this $20,000 position, again 1,800 shares, and the stock moves up 30 something cents. 50 minus, yeah, let's say 35 cents. I do the math, okay, and then again it closes at the highs of the day. Not every day, not every trade, nothing like that. Just the same concept, okay? And again, simple trade, the same amount of risk, actually in this case, half of the amount of risk, because the stop loss here is 11 minus 5, 6 cents. Let's call it with slippage 8 cents. Okay, that's another example that works. Let's see another trade from yesterday, Mara. Okay, now Mara basically shoots up in the morning, goes up, never touches the VWAP, and closes at the highs of the day. Are there entry points here? I have to say, if you miss the entry by how much is it? 11 o'clock, basically doesn't do much after, and the stock is maybe moving sideways. So I would have to say the only entry point that I see, and again in retrospect, is this reversal entry, and the price was 16.85. Now if you look at the consolidation, guess what? Again, magic. 16.85, the consolidation is a 10-cent consolidation. Why? Because the buyers are hungry for a Mara, and any pullback is being bought. So assuming you buy at 16.80, it closes again $1 up, and that's a 10-to-1 risk reward. But that's not a trade that I will have to say that really adheres to our strategy, because the time frame here is like 10-15 minutes to enter the trade. You're not watching Mara, and if you miss on this move, it's gone. Okay, so that's the fourth trade that I'm talking about. That's under, actually it's my mistake. That's above $15. So let's go back to the low ticket stocks. Clean Spark I show you. Okay, let's go with this one, NMIB. Okay, low ticket stock. It comes to the screener late in the day. Can we trade this one now? Really, take a look at this stock and tell me, do you want to deal with this one? And again, there are stocks that we want to deal with, and there are stocks that are really showing that we shouldn't deal with. Because look at these moves. This stock moves in 3 minutes from 11.60 to 10. That's 10% in 3 minutes. This is not the type of stock that we, as I myself, will suggest to day traders. This is risky, uncharacteristical, doesn't have a trend. Basically, it's moving sideways all day. Most of the move was in the gap in the morning session. Most likely will create havoc, very tough to manage, versus the example that we just saw. Okay, so that's an example where things are not going very well. I'll show you in the time that we have another example. Again, not a small ticket, but HUB. And sometimes trades fail. Why HUT failed? Again, the same. You can see the same strategy, the VWAP strategy. It didn't have enough energy to close at the highs of the day. So what happens here? Basically, you close it at the highs of the day and you make 0 cents or maybe 1 cent. Big deal. Okay, guys, I hope it was illuminating. Please like and subscribe to this video, and we'll see you in our next video in a minute.